Hello there, you're watching the weekly edition of Your Trades on ET Now. This is Priyanka Uppal along with me, Snehi. Snehi, next 20 minutes we tell our viewers how this entire week had gone by. Moderating earnings growth, sticky US inflation, and of course the continued selling by FI. These were the three dominant factors which you could see, and of course the RBI monetary policy. And the reaction was that we've closed for the second week with a very modest gain on Nifty. In fact, if you talk about the other indices, broader markets have outperformed the benchmarks this week. Second week in consecutive, last week also and this week also, banks have been under pressure. Though there was a recovery rally yesterday, but then that rally seems to have come on a halt. Or maybe it's the consolidation phase we are again going in, because now this weekend also comes up with bigger cues coming in from Asian markets, at least the China stimulus market. So before that, are we a little nervous and metals are back on their track? Let's understand from our experts also later moving on. But then let's talk about that, how they're talking about the weekly wrap. Nifty lost nearly 0.2% this week. Banks were dragged this whole week. PSU Bank lost 1.5%. Banks, private tech banks, they lost nearly 0.5% this week. Broader markets were outperforming the benchmarks. Small cap, mid cap, both gained more than 1% this whole week. The sector which was the clear standout sector, pharma sector, which gained the most, 2%, led by a couple of stocks like Divi's Lab. Citi came up with a note. Its stock was flying that day. Glenmark was on a move. And in fact, the entire pharma pack, if you've seen, maybe it's because more of a defensive moves, which actually traders found more interesting, that the pharma stocks were on a rally this week. Auto sector was the second highest gainer. Now, the top loser, despite being the defensive pack, FMCG, that lost the most, nearly 2%. Metals also lost their sheen this whole week. They lost nearly 2%. And the third sectoral loser, the third top sectoral loser was PSU Banks, which lost nearly 1.5%. Now, the stocks which were clearly standout gainers for this whole week were from Tata pack, and the top stock which gained more than 10% was Trent. Mainly on the news of their new foray into new segments like lab-grown diamond and even the beauty segment. And post that, the entire Tata pack is buzzing today. Post the news came in from, though it is yet to be confirmed, but then we know that what is in making.
Absolutely, in fact, we had the market guests who've come on the channel and confirmed it for us. That we're still waiting for some official word coming in. Yes, from the Tata
pack is buzzing. If you look at Trent, you look at stocks like Titan, Volta. All the stocks were buzzing in trades today, and Trent was a weekly gainer also. A couple of other stocks, Kotak Mahindra Bank, that was another sort of gainer, came in from Auto Pack also, Mahindra and Mahindra, and from IT we have HCL Tech. But then let's not forget the earnings season has started, and of course TCS missed on expectation, PAT declined, but IT, the entire pack has behaved very maturely today, which in fact did stood tall by. So few of the highlights for the day in terms of sector stocks. But what did you notice?
Absolutely. You know what? Let's just get in some expert voices on the show and make sense of the kind of week that we have seen, because lackluster when it comes to Nifty, but individual pockets have either done very well or done very badly. So let me bring on board experts today. Rajesh Palviya, Head Technical and Derivative Research at Axis Securities. And also we have with us today Mayuresh Joshi, Head of Equity at Marketsmithindia. And Mayuresh and Rajesh, thank you so much for joining us. Rajesh, first up, I'm going to come to you and give us a quick sense of the market's move that you have seen today, because we have really struggled every day on an intraday basis to touch that 25,000 mark. There have been days in the week where we have exceeded that mark, but we have managed to close on most days of this week below 25,000. Tell us, what are the next levels that you are watching out for the Nifty, and how are you expecting the markets to behave going into next week, especially now that earnings season is going to kickstart in full swing from next week?
So during the week, we have seen both indices were in volatile mode, and almost we have closed this week on a flat note compared to the previous week. But looking at the data setup, the major call put concentration is placed at around 25,000 level only for Nifty, and we have almost closed around those level only. So during the week, we have seen that major call writers were aggressive at 25,000, 25,100, 200 strikes. So that has acted as a major supply zone for any pullback which we have witnessed. But looking at the overall scenario, the way Nifty has recovered from the recent low of 24,700, We believe that yes, there is a possibility that we could see the follow-up buying action in the coming week, and Nifty may attempt to cross 25,150. That's the immediate supply zone based on the technical. So if at all Nifty crosses about 25,150, I think there would be a short covering action on the derivative front, and then possibly rally can extend to 25,300 to 350 zone. But on the lower side, the major support is placed at 24,850. That needs to be keep as a stop loss. Those who are buying Nifty at the current juncture. For Bank Nifty, the major supply zone is placed at around 51,600. But even if we analyze the most of the constituent for the Bank Nifty, very few pockets are showing traction. So still strength is absent for most of the large cap banks in the Bank Nifty components. So Bank Nifty may struggle to cross 51,600. That's the immediate supply zone on the high side. If at all it crosses, then yes, there would be another short covering action can take Nifty, Bank Nifty further higher to 52,000 or 52,200. But that seems to be unlikely in the near term. Maybe we can see some more consolidation in Bank Nifty in range of 50,700 to 51,600. This could be the possible consolidation we could see in Bank Nifty. But the Nifty looks to give a breakout about 25,150. So I think one can look to buy Nifty rather than Bank Nifty for near-term trading perspective.
So you have your view, more conviction coming in on Nifty and not on Bank Nifty. But let's understand that what are the fundamental triggers going ahead. Mayuresh Joshi is penciling in. Mayuresh, welcome to the show. Let us know that the kind of move that we've seen in IT stock, despite TCS a little miss on the expectation, PAT decline, and even the the commentary on the big deals that was also sounding a little conscious by the management also, and that's what many of the brokerages have also voiced in their notes. But then the IT pack, barring TCS, all the stocks were closed in green. In fact, solid green in terms of few of the stocks. What is your view shaping up for IT stocks?
Afternoon, Priyanka.
Afternoon.
I think two aspects here. If you probably distinguish between large cap and mid cap IT, TCS obviously disappointed in terms of what was probably expected out of it. But a large part of earnings recovery, in my opinion, should start taking place as we head into the next financial year. And the first steps will be SARD as we head into Q4, when discretionary spending patterns will get decided. So to a large extent, there will be earnings recovery that will come through for the sector as a whole. But mid-cap IT companies, Priyanka, have outperformed large-cap IT companies on all parameters. When you probably speak or talk about currency, constant currency or dollar revenue growth, they have done much better than their large-cap peers. The EBIT margins have held up pretty well. The order wins have been pretty robust. So you've not seen any sort of pricing pressure for a lot of mid-cap IT companies and their commentaries thereof as well. And therefore, I think mid-cap IT, in my opinion, can probably keep on outperforming large-cap IT, at least for the next couple of quarters. One can very well argue that valuations are through the roof. They are trading at late-stage basis in terms of their price action as well. But if you probably look at the environment around us at this point of time, and I was hearing your opening remarks as well, the markets will try to get a little bit more defensive if geopolitics comes to the forefront again in a significant manner. So I think IT might remain in flavor. Within IT, mid-cap might continue outperforming.
Mayuresh, thanks for that view coming in. Rajesh, I'm going to come back to you. And I remember we've had this conversation before also, but this sector, in fact, the moves we've seen, it merits a revisit. And I'm talking about the entire FMCG space, because this week FMCG has been the top loser. And we had seen some slight recovery coming in FMCG when the commentary was coming positive from the players that rural recovery has begun to kick in. What is your sense of the entire sector going ahead, given that we also have some substantial Nifty FMCG earnings lined up next week? And if it were up to you, how would you play this sector?
So most of the FMCG stocks have attracted supply pressure from a higher level, and if we analyze on the near-term perspective, most of the stocks have now slipped below to their near-term moving averages. That is adding the weakness on the near-term structure. I think very few pockets in the FMCG are trying to, hold the ground at the higher level. But most of the FMCG company like Dabur, Britannia, Nestle, most of the stocks are, slipped below to their near-term support area. So we believe that, some more consolidation or, slightly, supply pressure would be there for FMCG in coming week. So maybe and any minor pullback should be used as a shorting opportunity in this space, as structure is looking weak and still looking at the derivative data also. We believe that the way most of the stocks have attracted short built up can go further down from the current level. So I think some of the pockets like India Mart or a stock like United Sprit or these stocks can be looked at, because here structure is still bullish. But rest other stocks like HUL, Dabur, Britannia, Nestle, all stocks are still showing the weakness on the near-term to short-term structure.
CG Pack, which has lost the most this week, that also looks weak on the chart for further going ahead also. This is what Rajesh is reading out for us. But then both of you stay with us. We stay for a short break. More to come on the other side of the break. Welcome back. You're watching Your Trades. We have Rajesh and Mayuresh with us. Rajesh, coming on to you. Now, what we have seen is a FI's long position on index future. It's in a constant decline. It has been shrinking to longs at a size of more than 60%. It's now reduced to shrink into nearly 30%, 32% odd percent. But at the same time, DIs have been giving a good support. And we've seen the kind of volume, the kind of quantum of the selling FIs does and the almost the same quantum of the buying DIs have been doing. But then broadly, what do you see? What do you make out of the index from here? Because we've been hovering around 25,000 from many days now. Are we in for some more consolidation going ahead for the coming week?
So I think, Priyanka, we believe that this time this consolidation will remain for furthermore a longer period. We can term as a time consolidation, time correction activity would be there in this market, because now the earnings will be the key trigger for the market. And I think market is already corrected. Geopolitical tensions were still looming out, and then the China issues are also there. So I think global markets are also not supportive to have that much of confidence at this juncture for the trading point of view for short term play. So I think maybe Nifty may remain in a broader range of 24,800 on the downside, and on the high side 25,300 to 400. This could be the possible range for some more couple of weeks. And maybe we could have a mixed kind of behavior in the market, and very select stock specific action we can witness in the market. But yes, looking at the overall scenario, we believe that the focus is gradually shifting towards the large cap, and mid caps are still under profit booking. So major focus will shift on the large cap, and very select pocket can do well, as the technical structure for the sector like pharma, chemical, little bit buying action has been witnessed in the metal as well as in the IT space also. So I think these all 3-4 spaces can be looked at for near term to short term perspective. And for the Nifty, we could see a consolidation for next couple of weeks going ahead.
Okay, so that's the view coming in on the markets going ahead. Thanks, Rajesh, for that. Mayuresh, I'm going to come to you. Let's talk about a specific group of stocks. And well, the hot topic right now is the Tata group of stocks. We understand from sources that Noel Tata has been appointed as the chairman of Tata Trust. But tell us how this is going to reflect for the market. Is it? I'm sure this reflects as a positive sentiment. But how will shareholders, investors now approach investments in the Tata group of stocks, given there's been a change in management? Albeit it has been a smooth one, but tell us how the market is expected to perceive this.
So it's always the case for Tatas, professionally run companies, professionally run managements, ethics for top notch, no issues of corporate governance. And that is the trust I think the markets have placed on any Tata Group stock that you would like to pick and choose. Having said that, I think the expectations in terms of what you're choosing between the Tata Group stocks really depends in terms of the cyclical conditions that are existing. Obviously, I think stocks like Tata Steel, you have to probably be a little bit careful considering the commodity cycle and when you're entering this stock. Rajesh was just mentioning about the chemical side of things as the markets are concerned. For Tata Chemicals again, what are they largely going to do with their increased portfolio allocations, the value-added portfolio that they're bringing on the table, and the strategic inputs and outputs related to number related to that. So I think a few stocks are obviously cyclical driven. A few stocks are commoditized and are commodity cycle driven. But largely, if you probably look at the group, I think very, very ethically managed and professionally managed. And I think when the reins probably get handed over to the next successor, I'm pretty sure I think the same corporate governance will continue, which is top-notch standards. So I think anybody holding on stocks within the Tata Group, whether it's Indian Hotels, TCS, should continue.
All right, of course, that's what the view coming in, that it was a smooth transition, also a smooth, and then has been taken up by the market also. In fact, all the stocks were up today, and we've seen the kind of stellar move which came in from Tata Group stock only. Trend, of course, on the back of other news also. But yes, this pack was on radar for this whole week. Now, moving on to Rajesh. Rajesh, quickly tell us, since you said that there could be some sort of consolidation or maybe a time-wise correction which lies ahead for not just 1 week, maybe some more time beyond this week also. So what would be the trades that you would want to recommend our viewers at this point in time?
So I think the first thing where we are focusing, that is pharma, and from that space, Mankind Pharma is looking very attractive. The way stock has moved up in last couple of days, now stock has again moved back to its new all-time high trajectory. The way the volume actions have picked up in last couple of trading session, we believe that here there is a potential to continue furthermore upside. Possible target towards 2870 we can see in the near term perspective. So one can buy Mankind Pharma with stop loss of 2760. The second stock that we like is from the real estate space, that is Oberoi Realty. This is the fourth consecutive day where stock is making higher high-low formation. That clearly indicates that sustained buying action is taking place in this stock. In this process, stock is now very well placed above to all its near-term, short-term moving averages. We believe that the Oberoi Realty can continue furthermore upside, and there is a possibility that stock may able to give breakout of previous swing high. So we are projecting target towards 1970 to buy Oberoi Realty with stop loss of 1875. And the third stock is from the metal space, that is National Aluminium. Here the trend is on the bullish side. The stock is moving in upsloping channel on the daily chart. The chart pattern is indicating that there is a potential for further upside in the near term perspective. So one can buy National Aluminium for upside target of 238. One can keep a stop loss of 217.
Rajesh, for that view coming in. Mayuresh, I'm going to come to you quickly for one last question coming in. It's a sector that is not much spoken about these days, and I'm talking about the realty sector because it's been dilly-dallying between the red and green when it comes to sectoral moves every day. But last couple of quarters, we've seen a bit of a pullback when it comes to launches going ahead. Now, Oberoi Realty is one of Rajesh's picks that he has recommended. What are you spotting in this sector? And do you think the entire frenzy and the excitement that once surrounded this sector post the COVID recovery, do you think it's time for that to mellow down now?
So I think we are in the fourth year of a 6-7 year real estate cycle. So obviously, I think the base effect is now catching up with most real estate developers at this juncture. The second element obviously is the kind of new launches, and you're absolutely right. I think new launches have been a little bit less pronounced in the last few months. But again, I think a lot of these developers are going in for asset-light model, which seems to be the right strategy. Either in metro or in tier 1, tier 2 cities, because that alleviates a lot of debt onto their books. At the same time, with the joint development agreements, as work progresses quite smoothly over the next few years, I think revenue recognitions becomes far more palatable onto their balance sheets. Again, what we're reading through reports, it's a little bit mixed across cities. Inventory seems to be building up. There seems to be competition coming in from unlisted.
Right. All right, absolutely. So let's see what lies ahead for this week. Well, we ended on a weak note with the second consecutive week. Thanks very much, both of you, Rajesh and Mayuresh, for joining us on Your Trades today. Well, that's a wrap on this edition of Your Trade. Thanks so much for watching.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.